How evaluating property will save your relationships. Hello, and welcome to this special pet video series. Again, my name is Nathan Ayotte. I am the creator of the property evaluation tool. If you took the time to do any significant research, you would find that the number one reason married couples divorce is over financial strains on the marriage. We now live in a world where 50 to 60% of marriages end in divorce. As you may already know, buying a piece of real estate, whether it's a home, rental property, or apartment complex, is usually the greatest financial purchase during your lifetime. Do you think the mismanagement of real estate property plays a large factor in couple separation? You bet it does. The good news is that it doesn't have to be that way. Financial planning and evaluation on a property will be a solid shield against such emotional stress, guiding you to the right decisions, preventing heartaches later. By accurately evaluating a property appropriately, you don't have to be part of the 50 to 60% of marriages that end in an emotional and financial fiasco. What I will show you with the limited pet version is an extension of what I showed earlier of the evaluation of the duplex. This time, we will evaluate the finances of another property and compare it to the duplex we analyzed first. By doing so, we can see how easy it is to compare 2, 3, 4, or more properties that perhaps your agent referred to you or you find on the open market yourself through advertisements or community drive-thrus. So at this point, go ahead and open the limited pet version and we'll get underway. Okay, welcome back. I assume again you have opened up the limited pet version and ready to follow along. So what we're going to do here is actually compare two properties together and look at which one is most financially attractive. But in order to do that, I want to recap on the first duplex that we analyzed and just see what the finances again was on that one. So again, remember, it was $150,000. And as we scroll down to look at the finances, recall that the ROI, or return on investment, was 25.08%. Now in the bottom line box, the net income was $143 that we're able to pocket each and every month. Now I do want to take a look at something we didn't look at before, and that was the total closing. I think it is just slightly important to have a look at what the total amount of money required to acquire this property, which is $15,552. That is the total closing cost to get this property. Okay, now let's go ahead and look at another sheet. We're going to evaluate another duplex with different finances and then of course compare them together. And as we go through, keep in mind how this process will defend against making a purchase mistake and save you stress and difficulty with your spouse or other members of your family in your home. Because recognize when you have the ability to evaluate multiple properties and compare them together, it's going to give you an edge that most people don't have when it comes to looking at which property is most financially attractive or most profitable. And it's going to save you a lot of stress, a lot of time, and a lot of hassle that typically a lot of other people must endure. Okay, so let's go ahead and look at the inputs for this property. Okay, we have a duplex here, of course. We said we're going to look at another one. Units available for rent, of course, is 2. Now the list price, let's say it's $130,000 rather than $150,000. Let's say the age is 7 years. Let's say the square footage is 1,800 versus 1,500. Lot area will remain the same. Now we look at the mortgage information. MIP is 1%. Down payment, we'll leave at 5%. But let's say we acquire better financing. And instead of having 5%, we were able to acquire a 4.7% interest loan from our lender or bank. Everything else will remain the same. Going down into the cost box, let's say that the utility is $125 rather than $100. Looking at the finances, again, we need to change the purchase price to $130,000. And let's say, of course, the term is the same and the property insurance is the same. Now, moving on down to the income and growth box, instead of $1,500 rental income, let's say we were only able to get $650 in this particular neighborhood for each unit. So that comes out to $1,300 rental income each month. Now looking at the tax advantages, we'll highlight the taxable income is negative $850, which is equivalent to negative $255 taxes owed, which means you will acquire $250 at the end of the tax year by the IRS. Now moving on into the all-important investment box. Now we see here the ROI, return on investment, is 22.49%. Now that's less than the 25.08% we saw on the first duplex. Looking at the bottom line, we have here a $91 net income each month. So that's less than the $143 net income that we were receiving on the first duplex. So based on the ROI and the net income we see here, it's less financially attractive than the first duplex, or less profitable, even though this duplex is coming in at $130,000 for the cost. So recognize here that comparing the two properties, this one, the second duplex, is less profitable than the first one. But I also want to just take a peek here at the total closing. Notice it's $13,612, which the other one was about $15,500 approximately. So you are coming in with less closing, but it's less return on my money compared to the first duplex that we looked at, which was 25.08% ROI. Okay, so that was just a quick view and looking at two different properties here. You can obviously tell that you can do this on multiple properties, 3, 4, 5, 6 properties or more. And what I personally do is I just print them out, and I can lay out each evaluation side by side and look at them very easily, quickly, and transparently to determine which property is the most profitable for me. Okay, on the next video, I will present the elements of the full pet version that can really improve your evaluations that the limited pet version does not offer. I do want to call you to one action, and this is to run a different case than I ran here for practice with the limited pet version. It only takes a few minutes to make your inputs and play with a theoretical case that you can create yourself. Okay, hope this was an educational video. Like I mentioned earlier, I will show you the full pet version on the next video that will arrive in your inbox. This will cover elements that the full pet version has that the limited pet version does not, and how it improves your financial evaluations. Well, with that said, I'll see you in the next video. Have a fantastic day.